Hey, what's happening? Trader Tim here from EminiMind. In this video, we're going to review a couple of retracement trades from today and talk about how you can use the 30-minute range, which you've probably heard me talk about a lot if you watched any of my videos. The 30-minute range is super helpful for determining if we're likely to be a trend day or a range day. So we'll get into that and how you can use it. Um, this week it's been a little bit slow. If we back out to the daily chart, you can see we've just been basically going sideways, kind of along the 45, 75 area, a little bit above, a little bit below. Not really going into much of a trend. We come off this big up move from last month, and now we're kind of just sitting up here near this prior swing high, not too far from our all-time highs. So a little bit of a move up, and then gap down the next day, and then sideways, and then gap up and sell off, and then today we're inside so far. It's still early in the day, but not a whole lot of continuation. But there have been a couple decent moves throughout the day, and so that's what I want to highlight today in our video. And one thing that's really important to remember is that you don't need it to be a perfectly clean trend day open to close as a day trader in order to make money. In fact, a lot of times it's better if you get multiple trends throughout the day. You might have an uptrend in the morning and then half hour or 45 minutes of a downtrend, and you're able to capitalize on those different swings. So what I want to first talk about here is the 30-minute range. And what I mean by that is if you use the NYSE Open, the 30-minute range is just the high and low after the first 30 minutes complete. So 9:30 Eastern time, 30 minutes go by, 10 o'clock, boom, you got the 30-minute high and low. So I always mark that on my chart. And it's really helpful because if you're going to break out or break down and start a trend day, then you're going to do that early on, and that means you'll break out of the 30-minute range and you won't look back. So yesterday, for example, if I put a box around the first 30-minute bar, we broke to the downside, and we really never looked back. Like we never traded back inside of that range. And if we go, just back for the last few days, any time that we so like yesterday, for example, we initially broke to the upside and then came down, and kind of the top of the 30-minute range was acting as support. You can see these tails here from these hammer 30-minute candles. We would kind of come back into the 30-minute range, and then we would bounce. Come back into the 30-minute range and bounce. So in general, yesterday was an up, or this was Monday was an uptrend. Not a super strong uptrend, but you can still see the top of that 30-minute range kind of acting as support. If we go to a day like last week here, where we fill the gap, so you can kind of see this dotted vertical line, and this first 15-minute bar here trades at the same price as the prior day's close, so we filled the gap, and we have much less of a trend on that day. We spend a lot more of the morning inside of the first 30-minute range. We kind of dip below it briefly, and then we come right back into it, and then pop above it at the close, but not a very strong trend on that day. Part of the reason being that we filled the gap. And then also since we're kind of trading within the 30-minute range. And then another thing to note is if the 30-minute range is small, if that candle's, in this environment, maybe 10 points or less, give or take, it's going to be easier for us to break out of that range compared to if it's a 30-point candle in the first 30 minutes, then you're going to have a better chance of sticking around inside of that 30-minute range. So on this day, we broke out initially, kind of fell back into it, and then on the second push, stayed out of the 30-minute range and then trended for the rest of the day. So the 30-minute range is super helpful. If we go to today here in real time, we got this initial push up, and then now we're coming back into the 30-minute range. And anytime you fall back down, if you've already been trading above the 30-minute range, or if you're trading below and you come back up into the 30-minute range, you have a good chance of going to the opposite end. So if you just come down and trade, like let's say we just traded in a couple of ticks or a point or two, and then there was some support there, and we bounced, then the top of the 30-minute range is showing that, hey, there's some support. But in today's case, like if I go down to a little smaller time frame, you can see there really wasn't any support here. We had a quick break out, and then we've rolled over and come back in, and now we're kind of working our way down towards the bottom of the first 30-minute range. But what's important is to watch for these breaks above and below the 30-minute range. And so today, if we go to that first break of the 30-minute range, and this is why it's really doesn't matter if we end up trending open to close, or if we're range bound all day long as far as trade opportunities, because we can look for these same areas every single day. The top of the 30-minute range, the bottom of the 30-minute range. If we break above, we can look for retracements just above the 30-minute high. So that's this 45.79 and that was the halfway back long trade here, just by drawing from the anchor point, the most recent swing low before the breakout to the swing high. We pull back right to 45.81 in change, just round up and add a tick, and that's the entry. And the entry long, and then you can trail the next 61.8, do the next retracement, put your stop below that 61.8, and then just continue that up until you get stopped out up here. So that one was good for like maybe 4.5 points or so, plus a 3-point first target. And side note, if any of you, if you missed Monday's masterclass, I'll put the link for that in the description. You can get a copy of the recording if you didn't watch it live, or if you want to find out more about the retracement trade specifics and all the rules and details for that. So looking at the top of the 30-minute range, when we break above it, is a good place to be looking for a long. Let's pretend that we came up to this 30-minute high, and this little peak above here, let's pretend we came up and then we rolled over. Well, at that point, I would want to wait for a swing low to break. So in this particular case, the swing low is way down here, not very practical for taking a short, but let's say we had a swing low up a little bit higher, and we only peaked above the 30-minute range for a point or so and then rolled over. That's a sign of resistance. And then you want to be looking at kind of shorting up near the top of the 30-minute high. And if you just flip the chart upside down, it'd be the same thing. If you came down and broke below the 30-minute range, 30-minute low, you could be looking for a short that kind of bounces up to the underside of the 30-minute low. And if we were to come down, find some support, maybe you dip in or dip below the 30-minute range for 30 seconds, and or even just briefly, and then rally, and now you're trading back inside the 30-minute range, then you can be looking for a long to take you back up to the top of the 30-minute range. And so on range-bound days, you end up with these fairly large 30-minute opening ranges, and then you trade from the bottom to the top, and then the top back to the bottom. And so you can fade highs and lows basically all day long, especially with the help of the nicey tick. On a day that's a little bit more trending fashion, you'll be able to buy pullbacks after we break above or below the 30-minute range, and just continuing to do that until the trend breaks. Sometimes you get like a morning uptrend and then a sideways over lunch and then an uptrend in the close. It kind of makes like a sine wave. Other times the market is in these multiple trends throughout the day, and the 30-minute range kind of becomes the no trade zone. So if we go back to the 4th, it was this Friday, and we highlight the 30-minute range right here, we initially broke to the downside. And so it made, actually, no, that was Monday rather. Monday broke to the downside after spending the first maybe 45 minutes inside of the first 30-minute range, and got some momentum initially, and then we turned around and started this pretty decent uptrend. Here, all these green bars, these are all 15-minute candles. So that was a pretty long uptrend after this downtrend. But notice then, once we settled back in, so we came from just below the 30-minute range, we're starting to trend lower, and then turned around, came back to the top of the range, couldn't break out, and then we settled back into the middle of this 30-minute range. You don't want to be trading in that area. So all of this sideways cluster, just go back and reference the first 30-minute high and low. And so if you're trading in the morning, like I do, the first 90 minutes, you usually don't get into the lunch hour and kind of that slow chop that can take place later in the day. But let's say you're just trading the close and you're not able to trade the open, or you'd like to trade the open and the close. At the end of the day, you can go back and look at that 30-minute range, and if we're inside it, that's going to be kind of a cautionary area. You want to be uh, more likely to not place a trade in that area than if we had broken out. If we go to like yesterday, broken out of or in this case down from the 30-minute low, and then by the close we're still breaking down and trending, making lower lows. So just some helpful stuff that I use basically every single day. That 30-minute high and low. I mark the high, mark the low of the first 30 minutes. I find that super helpful for me to be able to have patience, to sit on my hands during choppy times, and not end up taking a bunch of stop outs when I might otherwise just try to be forcing trades. So take a look at that, and like I said, the masterclass recording is available if you want to learn more about the retracements or kind of go through a refresher for the new year. So hope you have a great rest of your week, and we'll talk to you soon.